Good day Forex trader. Your USD Forex signal, there's room for more downside. There is a likelihood that the pair will continue moving in a downward trend in the near term. Bearish view. Sell the Euro USD pair and set a take profit at 1.100. Add a stop loss at 1.1150. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1115 and a take profit at 1.1165. Add a stop loss at 1.1025. The Euro-USD pair continued its downward trend after the strong European inflation data and after the Federal Reserve Chair hinted that rate hikes were coming. The pair is trading at 1.1095, which is slightly above this week's low of 1.1058. Fed to move carefully. In a congressional testimony on Wednesday, Jerome Powell hinted that the Fed will start moving this month. That was interpreted to mean that the bank will deliver a 25 basis point rate hike in its March 16 meeting. The goal of the rate hike will be to help the country manage the soaring inflation. Recent data showed that the American Consumer Price Index rose to 7.5% in January, the highest level since the 1980s. This performance was blamed on the rising energy prices and the ongoing supply chain challenges. Sadly, the situation has worsened in the past few weeks because of the crisis in Ukraine. Airlines are charging higher fares because of the bans on airspace. Shipping companies are also increasing their costs. Most importantly, energy prices have gone parabolic, with Brent soaring to above $110 per barrel. The same inflation trend is happening in Europe. On Wednesday, data by Eurostat showed that the headline and core inflation rose to 5.8% and 2.8%, which were record highs. Like in the United States, Eurostat blamed the situation on higher energy costs. Therefore, analysts are starting to predict a situation of stagflation in the EU and the US. Stagflation is a dangerous situation when high inflation coincides with slow economic growth. In such a situation, it will be difficult for the Fed and the ECB to embrace a more hawkish tone. The Euro-USD pair will react to the latest US and EU services and composite PMI numbers and US initial jobless claims data. Euro-USD forecast. The Euro-USD pair has been in a strong bearish trend in the past few days. It managed to move below the key support level at 1.1123, which was the lowest level on January 28. It also moved below the 25-day and 50-day moving averages while the relative strength index has been in a bearish trend. Therefore, there is a likelihood that the pair will continue moving in a downward trend in the near term. If this happens, the next key support level to watch will be at 1.100. Gbp Usd Forex signal, consolidation between $1.3273 and $1.3458. There may be a possible short trade opportunity from $1.3458 later. Today's Gbp Usd signals. Risk 0.75%. Trades must be taken prior to 5 p.m. London time today. Long trade idea. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.3273. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. Short trade idea. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.3458. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 25 pips in profit. Take off 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Gbp Usd Analysis. I wrote on Tuesday that we were seeing the pound claw back some gains against the dollar, but the bullish move looked slow and weak and so far, had made up not even half of the loss, so the bulls did not look very convincing. I was expecting a bearish reversal at $1.3458. Unfortunately, the price did not reach that level over the day, but I was right to look to the bearish side as the price ultimately fell as low as the support level which I had identified at $1.3273. The technical picture now is a clear and flat wide-ranging consolidation between $1.3458 and $1.3273. I think it is very likely that the price will remain within this range over today unless there is a major geopolitical development concerning the war in Ukraine which shocks markets, which would likely send the price strongly lower. As the price is near the top of the range, I think a bearish reversal from $1.3458 would be an excellent short trade entry opportunity. It may be worthwhile entering a trade from a bearish reversal very close to $1.3458 even if the level is not quite reached. The half number T $1.3450 could also be good. Aud USD Forex signal, extremely bullish above 0.7290. There is a likelihood that the bullish trend will remain as long as the pair is above the two moving averages. Bullish view. Buy the AUD USD pair and set a take profit at 0.7350. Add a stop loss at 0.7200. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7260 and a take profit at 0.7200. Add a stop loss at 0.7330. The AUD-USD pair was little changed on Thursday morning as the market reflected on Tuesday's RBA decision and the commitment by Jerome Powell to hike interest rates in March. It is trading at 0.7265, where it has been since Wednesday. Powell commits to rate hikes. In a testimony to Congress on Wednesday, Jerome Powell hinted that the Federal Reserve was ready for liftoff in a bid to prevent the economy from overheating. The rate hikes will also be necessary to curb the rising inflation. Data published last month showed that the American inflation surged to the lowest level in more than 4 decades. And the situation will likely get worse considering that logistical challenges are expected to push prices higher. At the same time, energy prices have maintained a bullish trend this week. Natural gas price has jumped to record highs while crude oil has moved to the highest point in more than 7 years. Still, it is unlikely that the Fed's gradual tightening will help to slow inflation. The AUD-USD pair also reacted to the latest interest rate decision by the Reserve Bank of Australia, RBA. The bank decided to leave rates unchanged and hinted that it will only hike when it sees real inflation above 2%. On Wednesday, Australia published strong GDP numbers. According to the Australia Bureau of Statistics, ABS, the economy bounced back in the fourth quarter even as the Omicron variant spread. The economy grew by 3.4% after easing by 1.9% in the previous quarter. It rose from 4% to 4.2% on a year-on-year basis. The Bureau attributed this performance to strong consumer spending. Later on Thursday, the pair will react to the latest initial jobless claims numbers from the US and the non-manufacturing PMI. AUD-USD forecast. The AUD-USD has wavered in the past few days. It is trading at 0.7273, which is slightly below this week's high of 0.7285. The pair remains slightly above the 25-day and 50-day moving averages. It also seems like it has formed a double top pattern, which is usually a bearish signal. Still, there is a likelihood that the bullish trend will remain as long as the pair is above the two moving averages. If this happens, the next key reference level to watch will be at 0.7311, which is the highest level this year.